Okay, now to a consumer alert. Markets plunged today after fears that President Trump's new tariffs would start a global trade war. At the end of the day, the Dow dropped 724 points.
Our 10 News reporter John Horn is joining us. And John, you spoke to an analyst who says this is just one factor driving that stock market down.
Well, that's right. Another big one is that Facebook sell-off in the wake of the Cambridge Analytica scandal. The Dow is now in danger of having its worst March since 2001. Investors were shaky for most of the day until the drop sped up before the closing bell.
You get a lot of the decline during the day, and then sometimes the last hour, it's almost like the dam breaks.
That pretty much sums up Thursday on Wall Street. Investors reacting to President Trump slapping $60 billion in tariffs on Chinese imports by selling off stocks.
We've obviously instigated something, so now the concern is, are they going to, take a hard stance on their end and then bring trade to a halt, which is not good for anybody.
But financial advisor Dennis Brewster says there are more factors causing the drop. One, Facebook, down 10% this week as the social media giant deals with backlash over Cambridge Analytica's misuse of its data in the 2016 election.
When one of those leaders comes down, it tends to drag some of the others with it.
The Dow is now down since January 1st and is on pace for its worst March since around the turn of the century. And just last month, it plunged more than 1,000 points in a single day. Now it's facing more headwinds. The Federal Reserve voted to raise interest rates this week, and that can devalue stocks. Plus, Brewster says there's still uncertainty over how China will respond to the president's tariffs.
Sometimes the rhetoric can be worse than the actual effect, and that's what we'll have to see.
Now, while this quarter may wind up negative, keep in mind the Dow Jones is still up 16% from this time last year. So if you look at it over the longer term, the market is still performing well. But as always, we'll just have to keep watching.
The last couple of months, now we've seen some huge swings with the market. So what are these experts telling you is the best course of action?
Well, Steve, it depends. It depends on how old you are and how much time you have to invest. So if you're young, you got 10, 20, 30 years, it's a blip on the radar. If you're a little bit older and you need that money in a year or two, Brewster told me your money shouldn't be in the stock market. That said, there are some mutual funds that get more conservative as you get older, and so that could save some money. Plus, with the interest rates going up, benefits savers, more money in that CD or that savings account, and that's FDIC insured.
Got to ride these things out.
You bet.
Thanks, John.
You got it.